What's up, everyone? My name is Austin. I am the owner of AlgoX Trading. Today, I want to go over support and resistance. Okay, we are going to keep it pretty simple for you guys, but with support and resistance also comes learning how to time your entries. Okay, and if you've been in the Discord, you have your notifications turned on, and you've taken some of the algo alerts, then you would know that timing your entries in options trading, especially options trading, is super, super important. Okay, it's a huge part of our strategy, especially because we scale into our positions. Huge part of strategy, right? Again, we scale in, we don't average down, right? One of the biggest things in trading is you want to always add to your winners, not your losers, okay? So I want to break this, simple technique in trading, right? Drawing your support and resistance. I want to break it down on NVIDIA, okay? On the 15-minute time frame, because today we did alert NVIDIA December 20th $140 calls at the very, very bottom. Right. So I want to make this very simple for you guys. Okay, there's a couple ways to draw your support and resistance. First off, if you have any experience in trading or you have been doing this a while, you would know that you could probably do this by eye, drawing your support and resistance based off previous price action, right? So we want to see when drawing our support lines, we want to see multiple touches and bounces off this exact level, okay? So if I was eyeing this, doing myself, like I said, there's a couple ways to actually draw your support and resistance. Then I would look for where's the price touching a trend line and bouncing off multiple times. I like to usually get 3 touches, right? So 1, 2, 3, and then the fourth one today, the fourth touch, we took our entry on NVIDIA calls, okay? But I'm gonna make this a lot easier for you guys. We're not gonna just go based off eyeballing, okay? We are going to find our key pivots. Okay, so what I want you guys to do is once you're on the 15-minute time frame, go up to the indicators and type in key pivot. Actually, not key pivot, it's going to be pivots. Okay? And this first one right here, under technicals, pivot point standard, we will be using this indicator. Okay? So once you turn the indicator on, you're going to see something like this. A bunch of lines that show your support and resistance levels. Okay? I want you to go into the settings to make this easier. And with the colors, the color aspect of the settings, I want you to make them like this. Okay? Your key pivot point is going to be a black line. And the rest of the support and resistance lines are going to be orange like this. Now, once you're done, just click OK. Now, with our key pivots, and again, this is the easiest way to draw out your support and resistance lines. So what I will be doing here is I will be drawing a line at each one of these key pivots, right? A black line at each one of these key pivots. Okay, so there's one down here, 37.88. There's one at 39.65. We have another one up here at, let's see, 143, which is also a psych number, right? So full rounded numbers are also going to be good key pivot areas. Just know that in the back of your head. And then we have another one up here at 145. Okay, so these are going to be our key pivots. We want to enter when we get a bounce off of one of these key pivot support lines, or enter short when we reject one of these key pivots up here, okay? Now, I also like to draw my support and resistance lines. I usually use these more so for like supply and demand in between the key pivots, but drawing your support and resistance lines in a different color can kind of help you with chopping sideways, right? I use them for supply and demand zones. But once you're done drawing all your lines out, your key pivots, your support and resistance lines, you can hide that indicator, okay? So now we have all of our key pivots, support and resistance lines drawn out. Now, what I want you to see once you're done drawing these out is how each candle is going to react against one of these key pivots. Okay? So you can see we opened the market here. Okay? Actually no, that is wrong. We opened the market here. Okay, had a nice little push up here, right? And what do you know? Right here, we rejected one of our key pivots. Okay, we did wick over this a little bit, but remember, think of these lines more as like zones. Okay. So it doesn't have to be a perfect line that it rejects, right? But each of these lines are a zone of resting liquidity. So why did we enter these NVIDIA calls? Why did I alert these NVIDIA calls in the Discord today? I'm going to show you. Okay, so we opened the market here. We came up, rejected this key pivot, right? Also the supply zone. Came back down to the demand zone and bounced off of this support. Now, what's very important when you're trying to time your entries is you always want to base one of your entries off of a combination of bouncing off of your key pivot or rejecting and a doji candle. Okay, so we form this perfect little doji candle right here. Next candle, bullish hammer up. Okay, perfect entry on the 15-minute time frame. Again, it's really as simple as that. Now, if we continue up, we got a nice 100% move up this way. And again, here I like to use the 20 and 8 EMA. Okay, as gauges, but if you come up here, you can see we came back and tested this same key pivot, right? So here's a nice double top that we rejected. And again, doji candle here, doji candle here. This would have been a good re-entry to go to the short side, okay? And when you look at your support and demand zones, it's really like a game of ping pong, okay? So hit the ball this side of the table, right? Boom, back, hit the ball back to this side of the table. We bounce off support, come back to the resistance, bounce off resistance, come back to the support zone, and it just alternates between supply, demand, supply, demand, supply, demand, until we're ready for the next leg up. Now, note this, that the more times that we do reject a certain level, or at least test this level, the more likely the next time is going to break through. And same applies for your support lines, right? The more times that we come back down and test the support line, the more likely it is to break to the downside. Okay, you understand that? So this is a perfect example of why we alerted NVIDIA calls in the Discord today. Now, I want to take you to the SPY chart just because, look, SPY is one of those tickers where price action is a little easier to predict. Okay. So just moving through this example, I want to show you guys again how we do this, right? We pull up our key pivot indicators, okay? We draw out our key pivots. Black lines are key pivots. Orange lines are your support and resistance zones, okay? Or what I like to use as my supply and demand. Okay, so we're drawing our key pivots out here. And again, I'm just going to use this example to show you guys how well these key pivots actually work. It's kind of insane. I mean, it's like the ultimate money glitch in trading. As long as you know that do not enter unless it's off a doji candle, right? Know that these key pivots are zones, not just thin lines. Okay, so, and there are some times where the price is going to break through these zones. And once that happens, then you have either a buy model or a sell model to the downside, right? Like, as you can see here, SPY, let's see where we opened. We opened right here, okay? So we started a sell model to the downside after this key pivot was broken here. Now, when price action does break through one of these key pivots, you want to make sure that the full body of the candle breaks through, not just the wick, okay? So here we got a full body candle body breakthrough of this key pivot right here. Now you can tell that this zone right here was major support, okay, in the past, because price bounced off once, twice, 3 times, 4 times, and then up. Made its way up, right? So this was a key support level. SPY broke through this morning. The body of the candle broke through. This would be a good time to enter a short position, right? On the top of this wick right here. So we can't hit every play, right? But this would have been a good entry when we came back and tested this support. Okay, now all the way back down here, I show you guys, pull up, let's see where our resistance was off past historical data. Back here, you can tell that this key support line right here, okay, we're getting a nice bounce here. Now, again, I don't know how many, I just want to reiterate that these are zones, not just lines, okay? But you can see that price bounced once, we're coming down. It looks like, to be honest here, again, the more times that a zone is tested, the more likely the price is to break through, okay? Potential double bottom here, okay? So if I see this, by the time this candle is done forming, if it is still a doji candle, by the time in 3 minutes, okay, you can see 2 minutes, countdown for this candle to close, 2 minutes, okay? So we can wait, see what's going to happen. The only way we would continue with our short bias in this, okay, is if the body of this candle closes outside of this support line, okay? Now, really, it's more so in between our key pivots and not our support lines, okay? So this has nice potential to come all the way down here to 603.42. But right now we're in the middle of supply zone up here, demand zone down here. So we're kind of in the middle of supply and demand. So I would just imagine that SPY might chop. I would imagine this is what's going to happen since we are in the middle. Okay? So up, down, down, boom, boom, boom. I mean, we don't have any news catalysts until Wednesday, so it would not surprise me if we chop between this key pivot up here. Okay, let me make this bigger so you can see. And this key pivot down here. It would not surprise me if SPY chops in between these two key pivots until we have news on Wednesday. All right, I believe it's PPI. PPI Wednesday, jobs claim on Thursday, no news Tuesday, no news Friday. So we might get a lot of sideways action. But again, here's another example of how you draw your support and resistance. Now, if you want to do this by yourself, you want to learn how to do this by yourself instead of using indicators, I can also show you how to do that. So let's head over to Coinbase. Now, I personally trade on the 15-minute time frame. When I'm looking at my bias, right, I do want to look on the daily, okay, for my bias. Now, we've already decided that Coinbase, hold on one second. Just doing my daily technical analysis, I've already decided that Coinbase has formed a nice wedge, okay? And we got a breakout of this wedge, right? So what happened with Coinbase here, you can see the wedge, we got a nice breakout, we came back, tested this tested this wedge, went back up. Now today we're retesting this wedge, and I am going to predict that tomorrow we make our way back up on Coinbase, okay? So use the daily charts for your bias of the day. But 15-minute charts for your support and resistance. That's just what I found is easiest for me. So that is the way I'm going to teach you guys how to draw. When drawing your support and resistance lines, you want to look at what level. Instead of support and resistance, I like using the terminology key pivots just because it's easier to understand. Key pivot is a place where price makes the biggest move, right? So this massive candle right here, okay, our key pivot is going to be right under that. Okay, so wherever price makes the biggest move at, you just want to know that your key pivot is going to be off that level, right? So you can tell we had resistance, boom, price rejected here, came back up, rejected twice. Third time, price broke through, okay? And we got a massive move to the upside. Now we came back down, and this resistance is now support for price action right here. So key pivot held, made a move back up. Now up here, you can tell that the biggest move came here, right? So we want to draw our key pivot. Let me just make these black lines here. Here. But yeah, so you want to know that this is where the biggest move came. Price came up here, support was holding, tested support 1, 2, came back down, third time it broke through. All right, so your key pivot's right here. Now, again, you come back down, and like I said, you want to look at these areas as zones. Okay, so price came back down, boom, hit this key pivot, moved back up, See? You see the big move, biggest candle is through this key pivot. Okay, as it was testing, and finally buyers took over. So we made a big move to the upside, came back down. And this is, again, why I also use the 8 and the 20 EMA, okay? So sometimes price action is going to test the 8 EMA or the 20 EMA instead of your key pivot. Again, came back, test, we're kind of the 8 EMA was holding price up. And as you can see, once again, our big move came through our key pivot and back down on Coinbase. Here we're testing the support as key pivot, bounce off, probably bounce again. Okay, knowing our daily bias, we're about to make a nice move to the upside. So if you think of this in general terms and kind of simplify it, here's what we're looking at. Price rejected, finally broke through this level, okay, 313. Now we've been holding this as our support line since we've made this massive move. So 313 is our support. Now, the next key pivot up was 341 when we broke through here. Okay? So each time we come back up, this is going to be our next take profit. This key pivot up here. So the move that we're looking for on Coinbase is to move back up to 341. Take profit. Okay? That is the simplified version. All right, so one more example. I want to give you guys one more example. We alerted UPS today. We got a nice, I would say, we got a nice 100% play off UPS. So I do want to go over the ideal entry for this. Now that we got our support and resistance techniques down, I want to go over the ideal entry model for you guys. Okay? So again, we want to open our pivots. We want to draw out our key pivots in black. Okay? Black lines are key pivots. So, just to make it simple, with UPS, we have one key pivot within range, right? Our next key pivot is going to be our take profit. That is when I will be taking profit. Okay? Now, you can draw your supply and demand, support and resistance as red lines in between if you want to help with the chop and whatnot. Now, once we have done this, this was our entry model right here. Okay? So you could have, now let me go way back, make sure I'm not missing anything. Okay. So, again, on this, we didn't have any key pivots down here, okay, but what I did notice is we got a nice doji candle, bullish hammer up, nice move, and we tested this key pivot right here, okay. Now, on the entry model, what happened with the UPS and what I was looking at is we came up, we tested this key pivot. All right, we did reject, but we stayed in between the 8 and the 20 EMA. Okay, and when you get a crossover between, when you get this cross on the 8 and 20 EMA like this, right? This is another great technique to use as your entry whenever you see a cross like this. That is a great entry model, okay? Not even speaking on, key pivots or support and resistance or anything like that, but you get a nice cross. That is another entry model technique that you can use, okay? But So we alerted UPS here, right? No reason, I mean, so we alerted, we got a nice bullish hammer candle up, and the thing that I was looking at here is we closed the candle above this key pivot, okay? We closed above this key pivot. Now, this key pivot held, which means that this resistance, right, turned into support. All right, so now this is our support level here. Now, that's the thing about key pivots is support becomes resistance, resistance becomes support. Once we held over this key pivot, we came back and tested this support and got a nice bounce back up. So if you did not manage to get into UPS off of this EMA cross here, you should have waited until we came back down, okay, and tested this key pivot or bounced off this ADMA right here. This would have been your second entry model on UPS right here. Okay? So 1 on the EMA cross, 2 testing this key pivot. Bounce off the ADMA. Okay? 2 entry models there. So, yeah. That is how you draw your support and resistance. That's how you use key pivots to trade. Simplify, simplify, simplify. I mean, that is the most important aspect in trading is most beginners make this mistake of like, oh, I need like 10, 20 indicators and buy triggers, sell triggers, fair value gaps, you know, all this stuff that's just noise, right? It's just noise. All you need is your key pivots and your 8 and 20 EMA. Keep it simple. Next week we will be focusing on chart patterns. So I'm busy making that video this week, and we'll put out for you guys to yeah, because chart patterns in combination with supply and demand, support and resistance is it's like it helps you have more confluences when looking for the ideal trade setup, right? So we will go over that, and until then, I'll see you guys. Yeah, let's go make some money.